So, what we're going to go over here is society cohesion and erosion. First topic. Second topic is going to be ecosystems, because obviously there is buckets and buckets and buckets and buckets of tokens, thousands of them. Each one does exist on different networks, and there are bridges, there are exchanges tokens, there are governance tokens, there are automated market making tokens, there are stablecoin tokens. There is about a token for everything. Each one belongs to its own ecosystem. So, after which we will talk about Bitcoin to gold situation. It's basically demographics is kind of the best way that I think about it, because its preference comes from age and life experience, and a lot of that is demographics, which is the main reason of exactly what drives the economy anyways. Because currently the baby boomers hold most wealth, and then after that we'll be talking about India unbanning gold, right? So India is going through some unbanning gold, however, it comes with a lot of stipulations, and don't worry, there's no escaping inflation in any of these. So we're going to kind of factor all that in as we discuss this. So first, we're going to talk about the cohesion, societal cohesion, and erosion, which basically means the glue of society that holds, relationships, friends, family, and things together. So, what holds things together? Trade, currency, depends. We can see here we got an article from the Visual Capitalist, which is titled "Which Global Risks Have Worsened During the Pandemic?" So we can see some of the societal cohesion erosion is the number one first thing. People are not getting along. People are not agreeing sides or even best friend relationships or family relationships. You can see these are social threats, which in turn become economic threats, which are a self-feeding loop upon themselves, which compound to make things worse and trade worse, which also makes inflation worse. So according to respond is the erosion of societal cohesion. Currency is the glue that makes us all cohere together. It's like language. If we all speak English, we're all kind of on the same page. A person who cannot cohese, like glue, work together. It's the global risk has intensified the most since the start of the global pandemic. The World Economic Forum defines this as a loss of societal capital or societal stability. So how well can you get things done, especially when people do not get along? That's going to be a big issue in societal capital or societal stability. Number one, 27.8% societal cohesion, people just not liking and getting along with each other enough. Then livelihood crisis, number 25.5%. So the top two. Of the top five, three are societal problems, which are a culture issue. Number four, mental health deterioration, 23.0%. And then they have line in here, which is ultimately nothing any one person can really decide unless you're very high on the food chain, which is internationally corresponding, and you probably decide to some central bank stuff, and you're probably a member of this World Economic Forum. If you are able to have climate action failure as an environmental problem, right? So, with all that said, let's go ahead. We'll take a look at some of the crypto ecosystems that are emerging, because problems, can't remember the exact saying, but essentially it is the mother of invention, which is what we have. If you don't have a birth certificate and 3 pieces of mail to an address, you cannot get an ID. Therefore, you cannot get money, you cannot get paid, you cannot do business, you cannot eat. So it is an exclusive club just to have a bank account and be able to receive money and spend money, which is actually a very small percentage of the billion, almost 8 billion population of planet Earth. Especially, it's kind of silly when we log into these bank apps through our phone, and they're getting rid of physical banks. Your bank teller at your local bank is a McDonald's worker. You know, like it's a minimum wage job. So bank teller is a dying career. Most of them don't. I mean, counting cash, that's about the only workplace you are going to use counting cash skill set. So here we can see these new ecosystems emerging to run parallel to the old SWIFT or international basically wire transfer system just as your regular bank checking account. So we can see asset management tools. We can see MetaMask in here, which is a plugin. Works great. Kind of like your wallet into a metaverse. It's the only thing that's going to really give you that sense of security where you're actually the one in control of what's going on. You're logged into your game. You're controlling and custodying assets. The wearables that go along with maybe NFT assets or games or player, whatever it is that you're doing there. We do see most of transactions now happening on OpenSea and not as much on Uniswap. Uniswap is DeFi, so that's right now DeFi is not doing that great because we can see that OpenSea is doing 4 billion a month in transaction volume, which is a lot for JPEGs. They're doing more than decentralized finance is doing. So OpenSea dominating the transaction, the application space over Uniswap is a massive deal. And it said basically NFTs have done what Bitcoin and all these other things have failed to do. NFTs have made it into culture. So NFTs are a third barstool leg to Bitcoin, and then you have your crypto DeFi, and then now you have NFTs, which are becoming mainstream cultural. So it doesn't even matter if people care how technology works or what the heck. It doesn't matter. It's a cultural thing. Cool people are putting it on their Twitter profile pages. Cool people are talking about it. Cool people are being paid and promoting it. And normies are using it. Your celebs are using it. So the stability of NFTs, I think, is here to stay. And it has finally brought crypto to the normies. Whether they care or not, it doesn't matter. It really doesn't matter. The back end of all of it is so solid. They can't be changed or altered. I mean, these are solid, tangible assets on the back end. Mutually. So we can see decentralized lending. We can see some organizations or some just groups. A lot of them are just doing it because you don't need to get funding. Literally, if you program it, you're going to get funding yourself. I mean, you're kind of building the funding. We can see stablecoins. We can see decentralized insurance platforms. We can see decentralized autonomous organization platforms. These essentially mimic what essentially does. You bring them Ethereum, you collateral, they give you stablecoin. You push the Ethereum into it. There's no person to do it. You're just pushing Ethereum into a smart contract, which then executes a whole list of things and then spits out tokens to yourself. No people involved. It's a central bank without people behind it, and it can be vetted. It can be completely vetted, unlike your typical central banks in North America or Asia or whatever. You don't have that human error manipulation and their own personal agendas and incentives. We can see decentralized exchanges. We can see lots of them for this Ethereum, biggest built-out ecosystem. So this one, the Ethereum ecosystem gave birth to Solana, Avalanche, Cosmos runs kind of next to it. You can see all these different ecosystems, and they change so fast and so rapidly, you will not be able to really keep pace. Here's a Solana ecosystem. Now, these guys are said to be the Visa, right? And they're supposed to be super decentralized. Well, I mean, they're as decentralized as they can be for the hype of 2021 and 2022. But I mean, so they'll probably disappear. I mean, maybe not completely disappear, but they'll move into the back end, and a new character will move into the front and take attention. Currently, Solana is holding a lot of attention. They can do a lot of stuff on here. It's getting smooth, the GUIs are nice, programmers are able to use this Solana with C++, just regular coding languages. They don't need to know Ethereum, Solidity, or these other ones. Just regular traditional website builders can use the Solana platform, the ecosystem, and create apps, decentralized apps. So, band protocol, awesome there. So we're seeing all that. Let's take a look at these markets here. We can see that Bitcoin here up for the last 24 hours, up 10.8%. Ethereum up for the last 24 hours, 32%. We come down to Solana, of the top 10, doing the best, 13.6%, putting in a nice big old higher low. So higher lows. That's pretty bullish right there. And a lot of talk right now is the fact that Solana is probably your safest best bet currently. Some of the trade spaces in which I followed and a member of, we took a look down. We see a lot of green. All these top tokens are doing pretty well. But if you've been sitting and hodling and not taking advantage of green charts and looking for a way to allocate capital and not get wrecked, just looking at price data, then you probably been hodling down. You'll probably continue to hodl down. I mean, we could see some spike 5%. I'm not looking into it. So, with that said, we've looked at some of the ecosystems. Let's go ahead and look at the Bitcoin versus gold. Now, this is an interesting topic. Before we look at Ethereum, trade view charts and get into some technical analysis and seeing exactly what the internals of Ethereum are doing, we're going to talk about Bitcoin and gold. Because these two are often paired against each other, it's a really silly concept because they are doing the exact thing. One in the physical world and one in the maybe not so physical world. Or do people care if you have 100,000 Instagram followers? Whoa, you're valuable. So is tangible or intangible better? Currently, the bullishness between the two is that Bitcoin has had a run up, the odds of going up for another pump aren't as good as gold finally doing something, but at the same time, you gotta realize that gold is centrally housed. The majority of gold is in the same location. The majority of the gold is housed together in groups. And so when 60% of the gold is in one location, the control of that location can manipulate the remaining 40% is unevenly dispersed. Now, gold is also a demographic. It's a demographic thing. Older people, I look at it like this. Older people have majority of the wealth. People who are in their 40s and 50s, they have the majority of the wealth of the world. And typically, wealth is neither created nor destroyed. So that wealth, by some means, nobody knows how, but at some point, it will be translated to the next generation, the next demographic wave coming in. The way that it will probably go is, I think a lot of people will hodl gold. The price will never go up or reflect its intrinsic or true value, and it will destroy. And as they hodl with gold and it never goes up, those older demographic older people will spend whatever stocks, bonds, whatever they have until they finally have to sell their gold. After which, probably maybe, I'm talking like 5 to 10 years from now. After which, then gold will become valuable. Between now and the next 5 years, we'll see crypto give wealth dispersed to the younger demographic, and old people will continue to hodl gold until it's the last thing they have left to sell. Because you got to realize they also have to figure out how to fit in this internet world, and they're not as equipped as millennials to understand internet avenues of getting internet money or using these different payment rails. They're not. They're scared. They're probably not going to get involved in out of bounds. We have a lower risk tolerance. You don't have tolerance for this risk. So, with Bitcoin being prepared versus gold, I would definitely be more bullish on gold than I would be on Bitcoin. Now, I'm not bearish on Bitcoin. It's already done its thing. Chill out. It's done its thing. The only thing I would be probably more bullish on, especially right now looking at this chart, is definitely going to be Ethereum. We can see this big fat W coming in right here, higher high, higher high. And so this is the moving average convergence and divergence. We can see right now we have a pretty nice W that has broken this threshold right here. We can see that it's breaking to the upside. We can see a top 10 go. Ethereum is the second largest. I mean, it is a lot of capital. I mean, look at it. It's about a third of $1 trillion. That's a lot of money, but this thing can still go up 13% in one day. That's enough to make Warren Buffett clean out and change the stamp on right here. Look at this. This is the only real concerning thing about it. Like, it's a fake out. Because as it's pumping out, we can see it's actually moving up on the less bull purchase volume. So even though the price is going up, the internal volume purchases indicate that you can call it fake out, you can call it what you want to call it, but it doesn't look sustainable is the best way for me to put it. You see this little cross right here. But as far as bullishness would go, this maybe some Solana. Solana is definitely one that NFTs, a lot of things are running on it. As we get to the end of this bull cycle for these cryptos, you could be bearish for the next year and a half. It's definitely not going to offend me. I wouldn't care too much. I'd like to find a good trading pair here for the Solana versus the dollar, the almighty dollar. Everything's challenging the dollar, right? Bitcoin challenging the dollar, other currencies challenging the dollar. Even U.S. politicians are challenging the dollar. Well, we're infinite. We'll challenge it. It'll never. All right. Well, we all gonna see, huh? We all gonna see. So we can see the smart money as volume high here. We can see smart money. The volume coming down. Smart money is exiting the market. They're exiting it. They're trying to sell it at a price that's as close to the peak as they can without completely destroying the price action. So this is looking pretty volatile, and it's on a downward trajectory. I mean, I would expect to see this beast go lower. It's kind of coming to a Wall Street or a trader mindset of reload zones. So we can see that the market has taken back 70% of its up move. It's taking the money back from the market. It's the smart money taking money from the dumb money. The patient taking money from the impatient. That is going on. Now, with Bitcoin versus gold talk, right? Bitcoin versus gold. Infinitely divisible. So it's gold, right? The difference is one can be completely dispersed to an infinitesimal point, but there's still a completely fixed 21 million cap supply. So the block reward will continue to spit out a guaranteed mathematical proven amount. And at the same time, people will want to buy $5, $10, $20 worth of this stuff. So right now, the amount of people using this can only become more. Pair that with something that cannot be cloned, duplicated, printed. The price for one Bitcoin will continue to expand beyond what people can even let on most people. Now it's strictly almost an institutional instrument. It's actually bigger than an institutional instrument because we see places like El Salvador. It's a sovereign nation. It's an instrument that actually competes and runs parallel along the side against the banks that bank countries, which is has never been done before. and it's the fact that it uses computational mathematical solutions to create money for whoever can solve these equations. And that in and of itself means money. It doesn't come from a central bank. It doesn't come from somebody saying, hey, you get credit, but you don't. It doesn't work anything like that. And so all in all, it takes the value and distributes it evenly across smartphones or across desktops or across all these devices that we've been building for the last 20 years. So really anybody can be their own central bank, right? So like some tribes in Africa, places hyperinflate constantly, and hyperinflate doesn't mean anything. I mean, if you have 10% inflation, well, next year it's still 10%. So what is it? It's 20%. It's compounded. And then it's 10% the next year. It's compounded from 10 to 20 to 40. If it's just in 4 years, it's 10%. It's inflated 80%. So what it does is it erodes the middle class. It's a tool by which institutions and politicians use to milk to death their population who trusts the currency. People think that, oh, I don't trust my politicians, well, I'm using this currency. That's the tool by which you can yourself. So the amount of visibility of Bitcoin, there's plenty enough to go around. You'll just see the price for one whole one continue to go, up to the moon, as they say. Land goes for everybody into the moon. Top DeFi projects we can see that are being used. Personal favorite, Aave. We can see top 15 DeFi crypto coins. We got Kyber, MakerDAO, Terra Luna. This one is very underrated. Very few people talk about Kyber. We got MakerDAO, which was the very first DeFi, before DeFi was a DeFi. It's crazy to hear noise say the word DeFi. But MakerDAO creates the AI stablecoin, the very first DeFi concept to make central bank. Maker, if you plug in Ethereum, it's going to spit out one guy. All by itself with governance tokens, it's got a community behind it, following the roadmap and stuff. But the DAI token pegs itself essentially to the dollar through human psychology.